From the moment an idea is conceived in the lab, many phases need to be completed. But without doubt, the ultimate goal for any biotech company is to reach the prescription drug user-free act date and secure the approval of a drug. Do you want to find out which molecules and companies will have this catalysis in January? And analyze the case of AXOME Therapeutics? Stay tuned. We are starting the taxi. Today we start in Gijón, Spain, Asturias. Place to discover. If you like me to visit the city, leave in the comments. Welcome to Taxi Biotech, a show to explore news and updates from the world of biotechnology and understand its impact on the stock market. The stock data I present here reflects the performance of companies or the clinical trials and does not constitute any investment recommendation. This is pure entertainment. On Twitter, I've shared the approval or rejection dates for new drugs coming in January. There are several big companies such as Biogen, AstraZeneca, Biotech, and few smaller ones. The treatments include those for cancer, pain, and Alzheimer. The company more interesting to me is AXOME Therapeutics, with a prescription drug user-free act date set for January 31, as AXOME is seeking approval for a migraine treatment. Let's dive in and analyze it. AXOME currently has two treatments on the market, one for depression and another for sleepiness. It's important to say that this new drug under review is a re-evaluation by the FDA because in May 2022 this drug was rejected by the FDA due to concerns about chemistry, manufacturing or controls. However, there were no comments about its efficacy or safety. A lot of time has passed since 2022, and now they have the chance to re-evaluate after addressing the FDA's concern. How does this new drug work? Well, it's not exactly new. It's a combination of two already approved drugs. One blocks COX-1 and COX-2, and the other is an agonist for a pathway that has been in use for over 20 years. So it's essentially a new formulation. And hey, if it works and is effective, it's awesome for me. I love companies that, without $1 billion investments, are able to improve existing solutions with limited resources. Let's look for the science behind this drug. Compared to a placebo, it is clearly superior in alleviating the pain these patients suffer. It is also faster, here, the blue line, and longer lasting. While outperforming a placebo isn't a major result, what happened when compared to existing drugs? We can see here in this poster that it is also better in terms of speed compared to its potential competitors, and they had significant p-values. It also performed better in terms of reduced use of rescue medications here in the blue bar, and also is better in several indications such as sustained pain relief and helping patients return to normal life. Safety is also very important and shows similar values to other treatments. As always, I'll leave the links in the comments below. Okay, and let's take a quick look at the company's financials. We can see they have a solid cash position, around 400 million. The revenues from existing drugs are growing year over year by 100% compared to the previous year, and they spend around 300 million annually. With these numbers, we can see that they have enough resources to continue operations without needing to raise additional capital. While nothing is guaranteed, it's a good indicator. And now let's finally move on to the chart. On this weekly chart, we can see that the stock has been trading in a range all year, with a very slight upward trend. Let's take a look at his history to try to predict what might happen in January. Look here, in March 2022, they acquired license for their sleep disorder drug from Sanofi. Around that time, the stock rose around 30% here, in 2 weeks only to decline afterward. On May, the same drug that's now being reevaluated was rejected by the FDA, as I mentioned earlier. Following that news, the stock dropped around 30% here in the following week. And finally, in August, the FDA approved their depression drug, causing the stock to spike 55% in 2 weeks, before declining again later. Now, we are here at the doorstep of another evaluation for the migraine drug. When they announced the FDA would reevaluate the drug, the stock rose 8% over the course of 3 weeks. What conclusions do I draw from all of this? These are my personal conclusions, and they might differ from anyone else, so this is not investment advice. Do your own research. Look, since this is a company that already has drugs on the market, we've seen that approvals or reactions haven't had dramatic effect on the stock price. In other cases, we've seen stocks skyrocket 5x or 10x within 3 days or plummet by 8% in a single afternoon. In my view, I don't think that will happen here. I would expect price movements in the range of 35%. It's true that the company has a relative high market capitalization, around 4 billion, but at least it has products on the market. We've seen how, after positive announcement of drug approvals, the stock has appreciated over the course of 2 weeks, only to return to previous price levels afterward. The opposite, when the initial drug reaction occurred, it suffered a significant immediate losses. Recently here, following the announcement of the FDA's reevaluation, the stock only rose 7%. Perhaps this is because the outcome is already priced in, or perhaps there is fear of another reaction. You know, risk and opportunities. As for me, without giving investment advice, okay, I'll aim to position myself for that day. This could mean gradually entering over the next few days here with tight stops, or closely monitoring the situation on January 31, just this day, to try to capture a possible 30% gain. As you know, I like short-term trades, and this is what I could anticipate in the first or the second week surrounding January 31. But caution, if approval is already priced in and there isn't a quick rally on the day the drug is approved, investors might sell out on fear if they don't achieve their expected returns. If this overreaction occurs and there is an oversell, it might be a good idea to take advantage of the panic. But don't forget, I'm not sure if you are familiar with this famous tweet, but it illustrates the need to really understand biotech to be prepared for anything. Even with good data, stocks can drop 20-30%. So, in summary, the efficacy and safety data are solid. The drug was rejected due to issues with chemistry, manufacturing, or controls. I imagine they have resolved these problems. They have experience. But the fact that it took over 2 years raised some concerns to me. The stock's behavior in response to previous news moved within a 2-week range, eventually returning to previous levels. For example, a -30% drop after the rejection, and more recently, a +7%, a 7% rise following the announcement of the new evaluation. This gives us an idea of what to expect. The risks I see are, of course, the possibility of rejection and the likelihood that the news is already priced in. And that's the end of our journey. We are stopping the taximeter here in the city of Oviedo. Even though there is a rival between Gijón and Oviedo, I personally love all Asturias. See you soon.